Hi, followers of VisualPolitik. My name is Gabriel Glöckler. I'm a Principal Advisor in the Communications Department of the European Central Bank.
Hi, my name is Imran Islam and I am a cyber specialist at the European Central Bank working in market infrastructure and payments.
My name is Dirk Bullmann. I'm the Innovation Team Lead in the Market Infrastructure and Payments Department here at the European Central Bank.
With an initial exchange rate of $1.1789, the euro was born on the 1st of January 1999. It began to operate as an electronic currency used in financial markets and for cashless payments. However, it wouldn't be until 3 years later, that is, at the beginning of 2002, when the euro coins and notes that we know today began to circulate. It had all started a decade earlier, on January 1st, 1991, when 11 member countries of the European Union decided to integrate their local currencies such as the mark, franc, lira, or peseta, under the supervising umbrella of the European Central Bank. And with that, the euro era began.
El euro está a la vuelta de la esquina. Y para que nos sea más fácil, lo mejor es adaptarnos al cambio poco a poco.
Vamos a los céntimos, anda que vaya lío.
Nadie creía que España iba a estar hoy aquí participando activamente en el acto fundacional del euro, de la moneda única europea.
And it did so in style. Expectations were absolutely huge. Perhaps no one showed more confidence in this new currency than the European Commissioner for Monetary Affairs, Yves Thiebaud.
The euro will suppress monetary instability, reduce the cost of companies, and guarantee low and stable interest rates. Today, nobody would imagine the United States with 50 currencies. The dollar has made this country strong. The euro will make Europe's voice heard louder all over the world, which will allow it to better defend its interests, which go far beyond purely monetary ones. Yves Thiebaud, European Commissioner for Monetary Affairs.
Since then, 20 years have passed, a time in which the new European currency has gone through both good and bad times, which means, on many occasions, the euro has been a big topic of public debate. Because, folks, we can't deny it, the news is notoriously pessimistic. Catastrophes and bad news draw more attention than positive events. It's easy to believe that the latest news supersedes any slow and steady trend. So in recent years, we've all been hearing all kinds of theories about what the euro has meant and forecasts about the currency's future. Surely you must have heard at some point that the euro is doomed, or that its arrival led to winning and losing countries within the eurozone. But, well, what's the truth? What assessment can we make of the 20 years that the euro has been part of most Europeans' daily lives? And what challenges does it face? Well, thanks to the support and the sponsorship of the European Central Bank, some of VisualPolitik's team members, we travelled to Frankfurt to seek answers to those questions and celebrate the 20th anniversary of the European currency.
The European Central Bank is therefore to help Europeans to be able to spend their money, to invest it, to borrow money with confidence. We want to make sure that money is stable and that the banks where people put their money in are safe.
In this video, we're going to try and find out what the euro has meant and what challenges it faces. So let's get into it.
Unity is strength.
I think the first question we need to ask ourselves is quite clear. How and why did the euro emerge? To answer this question, we need to go back to the 1980s, a decade that wasn't particularly good for Europeans. At that time, Europe's economy was not having a great time. These were years of stagnation and bad statistics. For example, unemployment in the European Community's countries had practically doubled, going from 5.8% in 1980 to over 11% just 5 years later. Potential growth had decreased by 3 points, public deficits had begun to emerge with levels above 3%, and to make matters worse, the United States, one of the main destinations for European exports, was heavily increasing its restrictions on imports. Well, it was in this context that the idea of building a true common market emerged, something that would allow European nations to boost trade and subsequently strengthen their economic growth. The idea was to create a market without barriers, without customs, without tariffs, without restrictions for all goods. To do so, all administrative obstacles would have to be eliminated and the disparity between rules and regulations had to be ended. If a product could be sold in one country of the Union, it could be sold in any of them. But not only that, a genuine common market had to work with the same currency and with the same monetary policy. Among other things, this would prevent countries competing with each other by devaluing their respective currencies over and over again. And that was quite common in those times. For example, between 1979 and 1992 alone, Italy devalued the lira 7 times. Yep, that's right, in 13 years they had 7 devaluations.
The idea was to create a single market that would be as large and as competitive as that of the United States, and to help rebuild Europe after the war. Now that went well, things moved ahead, but then you realize that each country having their own currency is in fact a barrier to that deeper integration. And Europeans have been trying all sorts of things to make sure that competitive devaluations, where one country makes a big effort to be competitive and so on, gets undone by a devaluation of another country. And they've tried it through various means, the European monetary system and so on and so forth. And in comes the idea of monetary union, again, a gigantic revolutionary idea, thinking completely outside the box. Europeans said, let's not fix exchange rates, let's do away with exchange rate altogether, let's have one currency, a single currency.
And what's more, setting a common currency would make trade between the European countries a lot easier. Companies that no longer have to look at exchange rates, monetary policy decisions from different governments, or currency risk hedges, among many other issues. And you know what? The creation of the single market has been a clear example of success. It simply has fulfilled its objective. Intra-community exports have moved from representing 13% of the European Union's GDP in 1992 to more than 20% today. And the volume of intra-community investments has also skyrocketed. And in all honesty, throughout this entire process, the euro has played a key role. The euro has now been with us for 20 years. So what conclusions can we draw? Well, has it been good or bad for Europeans? So let's take a look.
La moneda que compartimos 300 millones de europeos está ya en circulación. 12 países han iniciado la transición para despedir a sus monedas nacionales y utilizar solo el euro.
No, es que son euros.
¿Quién es?
The time of the euro.
Folks, Europe has changed a lot in the last 20 years, in some cases for good, and in some cases for, well, not so good. But at this point, let me ask you a question. What do you think? Do you think the euro has been good or bad for Europe? Well, folks, with data in hand, I think we can say that in general, its influence has been positive. We've talked about this a lot here previously on VisualPolitik, but the question it really has to be, how positive has the change been?
Money has always been a language to express value. How much do you value something? These days, there's 340 million Europeans who only have one common language to express how much a thing is worth to them, and that's in euro. Even if we speak different languages, our language of expressing value is the euro. And that kind of brings us together. And that's a true benefit. A further benefit would be if you go abroad. If you go, I don't know, to Bangkok and you give your rickshaw driver a dollar note, they will say, yes, that's an interesting thing, I will take that. These days, if you go to Bangkok or you go to Istanbul and you hand out a €5 note, people will gladly take that. That's the benefit of having international currency. That wouldn't have happened with the peseta, I would assume, in the old days. We have created a currency that is stable, where inflation is low and where there's an environment of stability and certainty. That's a great benefit. Many people across many parts of Europe had not experienced that for decades. Now they have it, and it's become the most normal thing of the world.
Well, let's put some numbers on the table, shall we? Nowadays, more than 340 million people use the euro, and it has replaced national currencies in 19 of the 28 states that make up the European Union. Since its inception, the Eurozone's GDP per capita has increased by 52%, going from about 21,000 euros to more than 32,000 euros today, and the work participation rate is higher in the Eurozone than it is in the United States. In spite of that, inflation has reached an average of 1.7%, a rate lower than ones recorded in the 70s, 80s, or even the 90s. In fact, the Eurozone's inflation level in these 20 years has been lower than that of the Federal Republic of Germany over the same period of time.
Well, each country, in a sense, that does not have the euro has to decide for itself when is the right moment to join the euro. Those who are members of the European Union have signed a treaty that eventually commits them to also join the Eurozone when the conditions are right. And countries have to decide for themselves when the conditions are right, when they think that now the economy is fit enough, it's developed enough, it has the right institutions, it functions well enough.
This might explain the euro's huge popularity. Actually, only 20% of Europeans are against the idea. According to the latest surveys, 3 out of every 4 European citizens have a good opinion of the currency and think that it's generally been positive. And let's not kid ourselves, it isn't strange for them to think so. I'm sure that if you were offered to have your savings in euros or pesetas, or in some currency today that resembles the peseta, you probably wouldn't think twice about it. But hold on a second, because not everything has been sunshines and rainbows. In the last 20 years, the euro has also faced some very hard times.
The stressful years.
Between 2008 and 2012, things became very difficult. The global financial crisis caused a list of problems in most Western countries and true nightmares in some of the countries using the euro, such as Greece, Italy, Ireland, Spain, or Portugal. Clearly, that's when the idea of 2 Europes emerged. On the one hand, were the Central and Northern European countries that generally have high productivity indexes, competitive industries, and relatively responsible leaderships. And on the other hand, we had countries that historically attempted to compete by devaluing their currencies. When this option was ruled out due to the euro, they had boosted domestic demand through strong imbalances in their payments balance. In other words, they financed most of their spending via consumption and investments with funding from abroad, basically from Northern and Central European countries. And this money was largely concentrated in the real estate sector. We're talking about countries where the local governments didn't implement any structural reforms that would allow them to be more competitive, and whose banks were overloaded with loans linked to the real estate bubble. Loans that of course lost a lot of their value when this bubble burst, which obviously put the banks against the wall. Greece, Portugal, Spain, and Ireland, although Ireland's case is a bit different, required some form of financial assistance. At that time, the distrust and problems were so huge that, as you might have heard, there was speculation about the possible rupture of the euro, among other things because many European states had to pay such high premiums that their situation was made completely unstable. They simply could not finance themselves. In the end, the member countries of the Eurozone decided to do everything they could to avoid that scenario, and it was then that the European Central Bank President, Mario Draghi, pronounced these famous words on July the 26th, 2012.
Within our mandate, the ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough. Mario Draghi.
This meant that the European Central Bank would adopt extraordinary measures to stabilize the euro. It started to give longer-term loans to banks to buy a range of assets from banks, including government bonds and corporate bonds, so that businesses and people were able to borrow more and spend less to repay their debts. This has led to more economic growth and inflation.
I think the hardest time for the euro was when the crisis, which was initially an economic crisis, a financial crisis, a banking crisis, turned into a crisis of trust, a crisis of confidence. When people lost confidence that the euro as a project is a good thing, the euro will survive, that countries will do the right thing to stay in the euro. When people started doubting that was, I think, the hardest moment, because to lose trust and confidence is very quick. To rebuild it is very hard. If you go out and ask people in the financial markets, there were certainly some people who thought the euro would disappear. Some might even be looking forward to it because it's an opportunity to make money. Often forgetting what catastrophic consequences it would have had. And maybe also if you ask people in the streets, being fed some of the media commentary had doubts about it. If you read a headline, the euro's got 10 days to live, that you had in some papers, then it is natural that people start to wonder whether this is really solid. But what's most important in this is that ex post, people have seen that yes, if push comes to shove, the Europeans get their act together and they will do what is necessary, or, in the words of our president, whatever it takes, to make sure the euro will survive. I think there is an understanding that we haven't done all the jobs that we need to do, that we've done good progress, we made good progress, but there's more to do. The completion of banking union is one thing. The working on what we call a capital markets union is a very important point. And there are the other elements about economic union and all the way to a deeper political union, and say, how do we make sure that the benefits of the single currency, which are there, are shared equally, and that everyone, even those in countries that have suffered from the crisis, feel, yes, this is a good project that also helps me personally.
But folks, at this point, the question we need to ask ourselves is this. Is the Eurozone really prepared to face a new crisis? What could happen in the future if one of the Euro member countries has some problems? Well, folks, over the last few years, a lot of different mechanisms have emerged and have been implemented in order to strengthen the Euro's resistance. And I can tell you right now that a lot of these things are a bit of a mouthful. For example, we have the MIP, Macroeconomic Imbalance Procedure, and the ESRB, the European Systemic Risk Board. This is also the ESM, the European Stability Mechanism, which has been established, among other things, to provide financial assistance to the member countries if they need it. It can mobilize up to 500 billion euros and has already been used to assist Greece and Spain with their famous bank bailouts.
I think we've made good progress in completing banking union. That has 3 pillars: a single way of supervising banks, a single mechanism to make sure if banks are in trouble and they're failing, that we can resolve them. And what we're missing is the 3rd pillar, is a common deposit insurance guarantee, so that wherever you put your money into the bank, your deposit is safe throughout, regardless which country and which bank. That is to make sure kind of a euro is a euro wherever it is, in which bank account it is across the entire Eurozone.
And that's not all. Existing institutions such as the Stability and Growth Pact have also been reinforced. It requires a 3% limit on public deficit and 60% on public debt from member countries. And also, by virtue of the Fiscal Stability Treaty, almost all European Union countries have included the requirement of having balanced budgets throughout the cycle in their national legislation. Let's hope they respect their legislation. The European Central Bank has also increased its capabilities to deal with emergencies. In short, as you see, a lot of changes have taken place with the aim of reducing the risk of crisis and, if necessary, limiting its impact. The question is, are these measures enough, or should we continue to move forward, for example, with a fiscal union? And right there, folks, is one of the great debates that exists right now in Europe. But hold on a second, because crises aren't the only challenges facing the European Central Bank and the euro. The arrival of cryptocurrency and blockchain have also raised questions. These are, will new financial technologies be able to change the way that money works? Do they pose a threat to traditional currencies?
Blockchain is what we see as an infrastructure. So you can see it as a road. And the Bitcoin or other crypto assets, these are for us the cars on the infrastructure in a very simplified way. We think that the technology is promising, and it's not yet maybe ready for prime time for us, but it's not a threat, it's more an opportunity. So that's it on the infrastructure side. But then you have the assets, the Bitcoin and so on. I think a lot has been said by many central bankers around the world. Of course, crypto assets, they come with high volatility, and they are not a currency, they are not money. And our president also recently said a euro today is a euro tomorrow. And with Bitcoin, maybe it's different, because there's no identifiable issuer, there's no one responsible behind the currency, making sure that it's stable.
And well, this brings us to another very important question, and that's, well, what about cybersecurity? Especially in a world where the storage of financial records is digital and the only way to access the information or perform a transaction requires a digital device.
It's a new form of warfare in many ways. So you also have threat actors, nation states, hacktivist groups, script kiddies, all of them that have become more professional and more persistent and better resourced to be able to target the financial system. Why does this matter to the European Central Bank? Well, we ultimately have a mandate which is around financial stability, ensuring confidence in the euro itself. So if there is a disruption to the financial system, if the integrity of data is compromised in the financial system, then it has a possible contagion effect right across the financial system.
Folks, Europe is facing a lot of challenges, some of which we've already talked about on this channel. Challenges such as aging populations, growing international competition, imbalances in the public accounts of many of the member countries, or even defining exactly what European model we all want to follow. The European Parliament elections will take place from May the 23rd to May the 26th. That depends on the country in which you live. In one way or another, this is the moment in which all European citizens will have the chance to speak out and decide what future we want for Europe and what kind of union we want. So, well, now you know. In the meantime, if you found this video interesting, please do give us a like below, and once again, many thanks to the European Central Bank for helping make this video possible. And as always, thank you for watching.
And if you want to learn more about politics and hear even more of my lovely voice, you can join us at Reconsider Media. We have a podcast at reconsidermedia.com/podcast. See you there.